Hey, what's going on, family? My name is Brehon Mills, and I'd like to welcome you back to the channel where not only do we talk about great stocks, but we also talk about great books. Listen, family, I know a lot of you guys are, some of your accounts, especially young professionals and young investors. I know some of your accounts are down 30, 40, 50%. I know a lot of people went heavy into these overhyped stocks, and YouTube was just blowing up. Everybody was chasing and hoping for the next hyped up stock or penny stock that's going to go from 20 cent to $1, 20 cent to $2. But now all of a sudden, a lot of these overhyped companies, overhyped stocks are starting to retrace and retract back to their old level. So a lot of accounts are down 40%, some are down 50%. And it's important for you all to diversify. Diversification is important. And as you continue diversifying, you are positioning yourself for the long run. All right. Now, this isn't a sprint. This is a marathon. All right. So you need to think about, where do you want to be 10 years from now? Where do you want to be 15 years from now? Where do you want to be 20 years from now? All right. Because again, the right investments, $100 a month, over the course of 20, 30 years could equate to $1 million if you are making the right investments into solid companies. All right. And what we like to do, I do like to talk about some of the meme stocks when everybody's talking about it. I take a look at the momentum. I might jump in, ride a little momentum, set my stops, take a little gain, and I'm out of there. And so I do make money when they are pushing these meme stocks, but that's only a small portion of my portfolio. That's not even 5% of my portfolio. Okay. Most of my stuff, 85% of my stuff is in index funds. And I do have positions in other companies. All right. And within my index funds, Apple is almost, I think, 3% of my total holdings within in my index funds. All right. So, and that's why I want to talk about Apple today. It's another solid company. Now, if you are have a Robinhood account, one thing I do like about the Robinhood account is it gives you the option to buy portional shares. So if you don't have $123, you can actually set your payment up, because I do this with a couple of other stocks, is you could set yourself up to pay or to buy $10 a week worth of Apple. You can buy $20 a week worth of Apple. You could do this every week. You could set it up on auto buy and you're done with it. All right, you're done with it. You're buying shares weekly and you're building for the future. All right, those are some of the things that you can do with Robinhood. And that's one plus, and that's what I like about Robinhood. That's the reason why I really haven't deleted it. With all the stuff that came out, AMC, and GameStop, I actually sold everything, and I was getting ready to delete Robinhood, but I knew that was a knee-jerk reaction, so I sat back, I cooled down a little bit, and I still have some money in my Robinhood account. All right, but Apple is a phenomenal company. 2 trillion market cap. It creates and sells some of the best devices on earth. I mean, it has one of the most popular phones on earth, the iPhone. Also was it created the tablet, which is the iPad. And so they continue to create and innovate over there, and Apple's not going anywhere. Apple isn't going anywhere. It's going to be here for a while. And one of the things that we need to take a look at when invested in these type of companies is sometimes it's good to take a look at the balance sheet. All right. And one of the things I like to look at is the cash flow. All right. Now, cash flow gives you an opportunity to see how much free cash that this company has on hand. Now, if they're strapped for cash or negative cash, that's not a good sign, because that's basically saying the company really doesn't have enough to operate its business. So it's actually going into debt to function as a business. All right, so let's take a look at Apple. So going back to September 30th, operating cash flow, $80 billion of operating cash flow, 2020. That's amazing. Free cash flow. $73 billion. You know what a company with, generating $73 billion in cash flow for 1 year, they can go and buy anything they want. All right. And take a look at the previous year, 2019 operating free cash flow, $58 billion. They were able to weather the storm during this pandemic and increase their overall cash flow during possibly one of the worst times in the last 50 to 60 years. That's a huge sign. That's a huge plus for Apple. And Apple isn't going anywhere. It isn't going anywhere. All right. So now, when should we buy Apple? Again, personally, you could put it on auto pay, or you can buy during the times we have these pullbacks. All right. Now, you take a look at the 20-day moving average. One of the best times to buy Apple stock is when we have these pullbacks. All right. So we did have a pullback here below the 20-day moving average. And again, stocks don't fall too far away from the 20-day moving average. So if you watch my videos every day, you're going to be a specialist when it comes to identifying the movement of stocks based on the 20-day moving average and based on the momentum, the MACD, because that's what I talk about 95% of the time, utilizing the 20-day moving average to make great decisions. All right. To make great decisions. All right. So again, if you're looking to add shares of Apple, we want to wait until it gets to or below the 20-day moving average. Then we're going to add positions. All right. Add positions. And then we're just going to ride this thing up. Okay. If we come back, this may be a great opportunity to add positions. All right. Again. Now, we see a pattern here, right? We see a pattern developing. Every time it gets too far away from the 20-day moving average, what happens? It's going to snap back to or below that 20-day moving average. So what we can do when we get, 4 or 5 solid days and we are, above that 20-day moving average, you know what we can do? We could sell. We can close out our position. We could wait till it come back to the 20, right? And we could buy more shares. And we can continue doing this over and over again. We could continue selling at the high of, a nice distance above the 20-day moving average, and then accumulating more shares at the low. All right. So now you don't always have to transfer money to your account to use to buy Apple. You can just sell your Apple when it's at the high above that 20-day moving average, chill, lay back, because it's coming back. Then wait for it to drop, and then you add more shares. All right. It's easy peasy. Also, if you're looking for placing options, you can do the same. Right. So once we know we're across that 20-day moving average, we may want to place a call option. All right. Once it gets too far away from the 20-day moving average, we may want to place a put option. All right. We can play this game over and over and over again, but the way you really could master the movement of one company is to look at it every day. Build that relationship with it. Like you building a relationship with your significant other. Learn how it moves with the news. All right. Learn what makes it walk and what makes it talk and what makes it smile and what makes it laugh. Learn everything about Apple as you possibly could. And you can do this with a few other companies as well. Now, also, we're going to pay attention to the MACD down here. We're going to take a look at the oscillator when it's trending down or when it's crossing up, when we're crossing over. All right, because again, that MACD is a great indication of the momentum coming into the stock or the momentum leaving out of the stock. So those are the things that we want to focus on. Right? And if you can continue to do these things over and over again, what you're going to do, you're going to create more wins. You're going to have more success, and your account will continue to grow over and over and over, many times over. And we can keep it as simple as that. Right now, I hope this video added some value to you. Now, if it did, hey, please leave a like. All right, hit the subscribe button and keep coming back for more wealth building information. Peace.